It's this one, and like basically I always get the first two wrong, and then but it's weird to me because I always calculate like the average tax rate and marginal tax rate as 21, which should be right. So like I basically the first thing that I do is like I take EBITA.
EBIT, yeah. This is corporate, okay. Use corporate tax rate of 21% for your calculations.
Yeah.
So EBT, earnings before taxes, this is your taxable income. And tax liability.
I thought that was EBIT minus
no.
taxable income.
Yeah. Look, EBIT is earnings before interest and taxes. So you must subtract the interest first. If you subtract interest first, then you arrive at EBT. And what is EBT? It's earnings before taxes. And literally, think about it. If you are facing earnings before taxes, what does that mean? That's your taxable income.
Yeah, minus.
Isn't that right? So you have to apply, because they gave you 21% rate, apply 21%. Then you will find your taxes. That's your tax liability.
Wait, so I do EBIT times point by
No. If EBT, not EBIT, because I told you EBIT, EBIT is before interest and taxes, right? So you have to subtract interest first. Isn't that right? You have to get rid of interest first, because if you don't, then think about it. If you apply 21% to EBIT, then you are paying taxes for your even for your interest.
Yeah.
Isn't that right? What? And you don't think about it. It doesn't make any sense to pay taxes for your interest, because interest is not your income. Interest is your expense, your business expense.
Yeah.
Right? It will be an income to your lender. So it will be their tax liability. I mean, part of their tax liability. The lender will have to pay taxes on that interest income because that's their income. But for you, it's your business expense. So you should be paying taxes net of this business expense. Isn't that right?
Use EBT.
So you have to use EBT. I've been telling you, look at the word, look at the semantics, look at the semantics. It says earnings before taxes.
Yeah, so that's like
that means you before paying taxes, this is the earnings that you're facing. So that means, in other words, it's your taxable income. But it's basically reading comprehension in a way. I mean, if you should be able to interpret it correctly, right? Because the semantics is not misleading. The semantics is, leading you to the correct, conclusion. So then try that and tell me what you get here. Multiply, 21% to this, and that's your taxes.
I tried it before and I got 101, like 101.
Yeah. Then try that and subtract that, and then you will get net income, right?
Yeah, it said it was wrong though.
It says it's wrong?
Yeah, when I checked my work before.
That's weird. But then once you've done this and
this one, I think I wait.
Oh, it's a different problem now? Yeah, it's a different problem.
They're the same concepts.
Okay, but once you've done okay, let me do it from my end, because I cannot even grab and drag and copy. So let me you need to stop sharing.
Okay.
Yeah. But logically, 101, as long as the calculation is not wrong, that's correct. Wait a minute. All right. Let me just check. What was the number? EBT was 483, wasn't it?
Correct.
EBT times 21%. Did you do exactly 101.43? Did you put in?
Yeah, I got 101.43.
Okay. But did you enter it exactly like this? 2 decimal places? I thought you just entered 101.
Oh, because I know when I do like decimal places, it just rounds it for me. So I'm gonna do 101.43.
Yeah.
Yeah, it just rounds it automatically.
Don't let it round. Don't let it round. But also the it would be
So for tax liability, I got 101.43, and then income I got 381.57.
what?
I'm up.
All right. Let's see. It's not in the same order, so it won't be in the same number. So I could. So it looks like this. It looks like, isn't it? This is number 2. Numbers are different. Numbers are different, but it's in millions of dollars. Okay. So look, your numbers are in millions of dollars. So
Yeah.
when you enter it, you would have to enter in actual numbers. Try then,
Yeah.
that was so.
That's yeah, that's why I was getting it wrong.
Yeah, because usually when they report it, they don't report it in actual number because numbers will be too long. The numbers will be in either millions of dollars or in thousands of dollars, right? So if you just say this, then it's like $101. Isn't it right? That cannot be their tax liability. Isn't it right? So give it the correct, dollar amount in. Then see, give it correct dollar amount in exact numbers, and then see what it says.
Well, I can't check my work anymore because I checked it too many times.
Oh,
But
okay.
I'm pretty sure.
You'll have to right. You'll have to give it your lash. But look, here, taxable income here, EBIT minus allowable interest deduction. That's interest, right? And then this is EBT then, right? 285 right? Interest. They don't. It doesn't say anything about interest here. Oh, interest. So I don't know why they subtracted smaller number, but there's interest deduction, allowable interest deduction, but there's nothing that says. See, in this problem, it doesn't say how much of the interest you can deduct, but usually.
Isn't it up to 30%?
No. that would be for dividends, but
Oh,
where does it say 30%?
in the textbook, it says allowable interest deduction is EBITA times 0.3, and then taxable income is EBIT minus allowable interest deduction.
Okay, so then
So you
try
can,
that. I mean,
but here there's
when
no, well, there is EBIT, but there's
okay,
really
look,
no point because it says EBT right there.
yeah, this is taxable income. So you simply apply 20.
And that interest seems really high to me. I don't know.
Hmm?
Because they do 938 minus 455 for interest, but that seems really high for an interest deduction. So
You can't tell whether it is high because it depends on how much debt you have, right? Think about it. If you have like $10,000 debt, and if your interest rate is 9% on $10,000, 9% interest can be under something, isn't it right? So it depends on the interest rate and the total amount of long-term debt that you have. So whether it says interest is, did you say interest is 900 something in your example, or 300 or whatever? It depends. It depends on the level of debt you have and also the level of interest rate, right? Also, when nothing else is given, right? In other words, when no other verbiage, I mean, here, there's no other verbiage, but just this data. And based on this data, straightforward, your interest, your tax liability will be 21% of this.
yeah, of EBT, right?
Right. That's the logic. That's the logic behind it. But without knowing, and usually, I don't know. It was very arbitrary. It seems very arbitrary that they said 30% in the textbook because.
That's for interest, though.
Yeah.
Yeah.
You can deduct. I mean, think about it. As I told you, interest is your business expense.
Yeah.
Right. You derive any. I mean, interest doesn't add to your income. Interest doesn't add to your profit, right? It's your expense. So it's think about it. It's injustice, right? It's from legal standpoint. It is an injustice to not let you deduct all your interest expense, right? And only allow 30%. 30% would be very low. I would say probably if they allow 70%, up to 70%, that would be more reasonable. But I never knew. I didn't know it was 30% or from. And besides, that's EBITDA from EBITDA. It's another story, but EBITDA is more, a bigger number than EBIT. But you might wonder why they wouldn't allow deduction of 100%. Why they don't allow up to 100% of the interest? The only justifiable reasoning for that would be if you allow 100% of interest to be deducted, right? Then there will be a lot of companies that will be taking on too much risk. Isn't it right? They will take advantage of the system, and then they will finance a lot of their assets with debt.
So
And then write off a lot of interest, write off a lot of interest as expense. But then this makes the corporation, this makes the financial distress of the corporation unbearable. And if a lot of companies are taking advantage of that generous interest, deduction, then across the entire economy, the businesses will be all very risky, which is very
it's bad for business.
right. It will jeopardize the entire economy. So
Yeah.
that's probably why they put limit on the they will put limit on the interest allowable interest deduction. But if you're go back to your problem and see, you have EBITDA number.
Yeah, I do.
If you have,
it's like
if you have EBITDA and try that, find your allowable interest deduction. If it is 30%, 30% of this. Did you say 30% of the interest or 30% of EBITDA? Whatever it says, because what it shows here, allowable interest deduction. This number, let me see if this number is 285. 285, is it 30% of this? Let me check.
In the textbook it said like 30% is the highest, I don't know, interest.
In 50 divided by yeah. See, this is the maximum. So 285 in my example, 285 is the maximum allowable interest, which is 30% of the EBITDA, right? So your interest, whatever your interest is, from EBITDA, if you subtract that, this will be your taxable income. I mean, it should be equal to, under normal circumstances, it should be equal to EBT under normal circumstances. So apply 21% to that. So do that with your exam.
Yeah, I did it, and it's way higher. Just because it's kind of close to EBIT, because after interest they take like 50% of 938, and then you get EBT, which is 483. But my allowable interest is
share your screen. I will let you share your screen. So share your screen.
I don't think it works with this problem.
So because I can't see, so you have EBITDA there, right?
Yeah, I did this times 0.3.
Times 0.3.
And then
okay,
I did EBITDA minus what I got.
No. Don't worry about it. So allowable interest is 30% of it. So deduct 30%, that whatever that 30% is, deduct it from this and multiply 21% to that.
Oh.
Okay. Because we are taking a different route, because that's what the textbook wants. You're not subtracting that from EBIT, because it's clear, according to this, the EBIT is this and interest is this. But we're not taking that route. We're taking this minus, this times 1 minus 0.3. This times 1 minus 0.3. In other words, you're subtracting 30%. So whatever is left will be 70% of that. So that's your that's your taxable income times 0.21, and that will be your, tax liability. I mean, because that's how the book is doing that, which is, very peculiar. Because think about it: if the those regulations change, what if they allow up to deducting up to 70%? What if they allow deducting up to that is so look, they are not even here. It's not even EBITDA. EBIT. Now this is EBIT without depreciation, but EBITDA is just EBIT and amortization. Usually it's EBITDA, EBIT and depreciation and amortization.
Yeah.
But every little problem they make this, they tweak a little. So then they used EBIT.
Yeah.
Only this.
Oh, they subtract allowable interest deduction, and I think that's what the A stands for.
No.
I don't know, but I don't know. It really confused me.
Go back to the problem. Go back to the chapter problem. Don't you see it says EBITDA, DA, depreciation and amortization?
Yeah.
Okay. And what did the book say? And in my example, this is the this number is obviously greater than this because it includes depreciation and amortization, which is actually cash preserved, right? It's cash. It's not cash spent, but cash preserved. So this is a bigger number. So from this bigger number, according to my example, from this bigger number, they the textbook says, this is the regulation. The textbook says, 30% of EBITDA is allowable interest deduction. So then go by that. So multiply this. You understand? EBITDA, which is EBITDA, which is 1,370,000 times 0.7. You understand what 0.7 is? Is what's left after deducting interest, right? Because allowable interest is 30% of that. So regardless of what the actual EBIT is, what the actual interest is, you have to go by that, right? EBITDA times 1 minus 0.3, so 0.7. And then that's your taxable income, and multiply 21% of that. And then you will get not this, but you already entered this, but whatever, change this, right? Change this to whatever you get. Let me quickly I can't do anything. So can you let me jot down that number. Oh, what was your EBITDA?
I'll share it back.
No, don't you don't need to share, because if you share, I cannot use anything. I cannot even bring up my right.
I'm gonna stop.
Okay, 1,370. So that's million, right?
Yeah.
Everything is in million. Everything is in million. So that's like 1,370,000,000, right? So let me share my screen now. Do you see my calculator? Do you see my calculator?
Yeah.
Okay, let's do this. Okay. So 1, 3, 7, 0, 0, 0, 0, 0, 0. Everything is in millions, right? That's what.
Yeah.
Isn't that right?
Correct.
Yeah. And times 0.7. This is your taxable income. Times 0.21. This is your tax liability.
Yeah.
Right? So you calculate it this way. I mean, I cannot calculate it for you. You calculate it this way. And for one last time, then change your answer. And, you cannot check your answer anymore.
But I think the 101 is right. I just didn't put it in millions.
Oh, but it was right? I don't know. According to my example, then it will return wrong, incorrect. It will return it as
If I put
incorrect.
101 million.
Hmm?
Wait, I'm getting confused. Is that the right answer to the problem?
This one?
Yeah, or is it the 101 million?
This is very large number, 201 million, right? But if the think about it, if the original we came to this because if this is the original number, right? That's 1.37 billion. This is right. 1.37 billion, right? And they allow only 30% of this for interest deduction. So whatever is left as a taxable income is 70% of that. 70% of that will be 959 million. And if 21% is the tax, yeah, that's 21% of that.
But the interest for this problem was like close to 50%. So
Can you share your screen again? Let me stop sharing. Share your screen again.
yeah. You can see EIT is
Yeah.
988, and then the
No,
interest
yeah.
is 500.
So their interest is like 455 million. Earnings before taxes 483 million, right? 483 million. So
Yeah.
290 290 something million is plausible.
Really?
It's plausible as taxable income. Isn't that right?
Yeah, it's plausible, but like it's not the right answer for this one.
It's not the right answer. Did you check it already?
Yeah, the right answer is 101,430,000.
Oh well, then that's wonderful. I mean, you got this number by doing what?
I mean, I'm pretty sure it is. Like, like I don't know if it's right. I'm kind of asking you if it's right.
So how did you get this number? You got this number by multiplying 21% to this.
Yeah, because
Isn't that right?
taxable income is EBT and then times.
That's right. As I said, logically that's correct. But then the textbook is, tweaking it, in a peculiar way by inserting this clause such as, allowable, interest expense, which is 30% of EBITDA. So if that's what the textbook says, and if I showed you my example. In my example, they did it like that. So can you logically, given no other, in other words, this problem doesn't have any other narrative, isn't it right? There's no other narrative. Given this problem alone, there's no other narrative. Isn't that right? So how do you know? Given no other narrative, no other verbiage, how would you know allowable interest is 30% of EBITDA? There's no such clue, right? There's no such clue given this text alone. Isn't that right?
No,
So
but
according
because because EBIT, it says EBIT is 938, and then less, and then you subtract 455 for interest. That's way more than 30% deductible
yeah,
interest.
Listen, so with no other read that you saw that in the textbook, right? That 30% of EBITDA, right? Allowable interest, 30% of EBITDA. That is you know that because you read the textbook. And
Yeah.
I didn't know that if you didn't tell me. However, anyone who is doing this problem without reading that peculiar clause would just go by the logic, and then would calculate exactly, from EBITDA you subtract interest and arrive at EBT. That's the taxable income logically. So you would apply 21%, and you would arrive at exactly that number, right? You would arrive at don't change that. Let's stay in there. So you would arrive. So logically, this number is correct number, logically. But again, because the book is using that peculiar clause, it's very idiosyncratic. You understand? Sometimes it's, some of these problems are very idiosyncratic. So unless you knew that 30% of EBITDA, that's you wouldn't have a clue. But so let me share my screen now. So can you will you stop, right? And then let me share. Okay, my screen, and well, let me take you. So this is my example, right? This is number 2. So it's the same problem. You just have different number here, right? Because everyone gets a different problem set, but the order of the problem is the same. So it's the same pattern as far as the pattern is concerned. It's the same. Now then, think about it. What they did. What they did here. This EBITDA, only 30% is allowable. 30% of this is this. So now think about it. That is not the interest that you subtract here. That is the interest by this peculiar idiosyncratic clause.
And that's the right answer.
So then, after subtracting that, that's the taxable income, and applying that 21% to this, you arrive at this 78 million something. Yeah. That's the right answer, because this is the answer provided by Connect.
Oh, so I should do it the other way.
Yeah, that's what I'm saying. That's what I've been saying. If you want to get it right, do it this way. But again,
it's so confusing to me.
I know. That's why I've been saying this. Logically, what you originally did was correct. arriving at that 101 million something, that was correct logically, because who would know independently? Who would know? I mean, if you hadn't read that idiosyncratic clause in the textbook, who would have known? But so once again, if I didn't know that there was a something like 30% of EBITDA, right? That peculiar idiosyncratic clause. If I didn't know, I or anybody would go by exactly from EBIT, subtract interest, and EBT, that's taxable income. Apply 21% to that. That's logically correct way.
Yeah.
You understand? But now think about it.
I understand your reasoning, but I also I understand like everything that you're saying, but I'm just like, I feel like your way is like better because the interest, if you do like 0.3 of EBITDA, then you're gonna get a different
yeah, of course. I mean, try that. You cannot check it anymore, but that will be the answer that the Connect will accept.
yeah.
Right? That's correct. But once again, listen. Once again, listen. All these idiosyncratic peculiarities will become meaningless if they if they amend such regulation. Isn't it right? And also, internationally, suppose in the US, let's say that is 30% of EBITDA is the allowable interest deduction. But that's only in the US. Suppose you're in France. That rate, that percentage can change. Isn't that right? Suppose you're in South Korea, that percentage can change, and they will not, maybe in Japan or in South Korea, they are not going to, they are not going to say use, EBITDA. I mean, in other words, what is the universal common logic there? Universal common logic is, think about it. If I'm doing this problem in France, and if in France, if they have, or in UK, if they don't have such peculiar idiosyncratic peculiarity, anybody who knows financial accounting will follow just, oh, this is EBIT, so subtract interest, right? Because interest is business expense, and normally, in some countries, they will allow 100% of the interest to be deducted. And then this will be EBIT, EBT will be this, and whatever the tax rate, if it is 25% in UK, you will apply 25%, and you will get taxes, and you will arrive at net income that way. So, what's important is that universal logic, not idiosyncratic peculiarity. Right? Understand?
I understand what you're saying. For your test, like if I have this question, I should go off like EBT, right?
Yeah, because you will need to follow the textbook, because the textbook is a Connect.
Oh,
right?
oh yeah.
You understand? This Connect problem is we'll be doing it like the way they showed illustrated in the textbook.
Right, but for like quiz 1, for your quiz, not for like Connect, like that.
No, my quiz 1 is not Connect. Quiz 1 is, once again, topic 1 is my own material, right? Topic 1 and topic 2. So quiz 1 will be on Blackboard, right? It will be true to the universal logic.
Okay, yeah, that's what I was asking.
Okay.
Yeah, I get it.
All righty.
So the answer to the problem is 201 million.
I don't know. I mean, what was the
Based on what
what
we
was the
saw
number in your? Huh? I don't know. You need to calculate it again from maybe
in the textbook. Yeah.
whatever was EBITDA, right? So we came to this, wasn't it like this, right? I mean, if we followed, from EBITDA, right? That was EBITDA, right? Deduct, 30% interest. So your EBT will be like this, and then 21% of that will be like this. So I mean that's what following the textbook example,
Yeah.
right? Factoring in after factoring in the that idiosyncratic peculiarity, right?
Yeah.
Okay.
That answers my question.
Okay. All right.
All right. Thank you so much.
All right. You're welcome.
I
You're
have a good one,
welcome.
Professor.
You too. You too. Take care now. All right.